Hi, my name is Fulton Abraham Sanchez. I am the CPA of the firm FA CPA Consultants, and today we're going to speak about how an offshore company complements your tax strategy. There is a case for opening an offshore company, and there are two elements that in regards to this strategy. The first one is privacy and confidentiality, and the second one is asset protection. Whenever you are considering an offshore company, you need to be aware that some jurisdictions, after the Panama Papers scandals, they are not anymore providing secrecy in terms of confidentiality. They are making the registers of companies public records. So whenever you are considering an offshore company, be very careful in selecting the jurisdiction for the strategy that you are trying to implement. Second, asset protection. Once I was in a networking event, and an attorney approached me and mentioned that if I was able to help identifying assets hidden in offshore companies. This is how attorneys plan their strategy. Whenever there is litigation between partners or spouses, they try to create or try to accumulate all the possible information to create frivolous lawsuits with the objective of trying the interest in favor of their client. So be very careful whenever you are planning a strategy, an offshore strategy for your business or for your property, in terms of how you can shield that property, that business, from frivolous claims. In terms of tax principle, there is the first element of the most basic elements by selecting jurisdiction is which one is the one that offers the most protections. In terms of secrecy and in terms of asset protection, that all depends of the nature of the legislation. Just to give you an idea, many years ago, when there is a family, a rich or wealthy family, then the head of the family created a trust, and in a very sound legislation, and when the head of the family was not anymore with the family, then the trust was for the benefit of the spouse. The spouse was not the mother of the children. Then some conflict between the widow and the children started, and they bring a lawsuit to the offshore jurisdiction to try to break the trust. Because the trust was very well formed, they were not able to break it. And the jurisdiction, the offshore jurisdiction where the trust has been created, was in favor of the widow, and the trust was kept. The trust didn't fail, the trust was not broken, and the benefit that was created by the head of the family from the beginning, with the objective of the creation of the trust, was actually kept. So be very careful about the jurisdiction that you select for creating not only a company, but also for when you create an offshore trust. Now, in terms of company structure, whenever there are passive income like real estate, it's better to select an LLC. In some jurisdictions, it's also known as limited company. When there is an active business, an active investment, it's better to do in a corporation that is also known as IBC, or International Business Company. Just to give you an example, big corporations in the world, what they do is they create an offshore entity. Some do it in the Caribbean, others do it in Europe, and the headquarters, the big company, brings or translates or transfer the intangible asset, the logo, the marketing methods, to the offshore jurisdiction. And the offshore jurisdiction start to bill the headquarters for the use of that intangible property. For that, in that way, the offshore entity start to accumulate money. For anyone who is not U.S. citizen, that scheme works. For U.S. citizens, after the tax reform, that is not possible anymore to accumulate money or to accumulate profits in an offshore company, because they are obligated, US citizens are obligated to report the profits of any offshore company where that they hold over 10%, and pay taxes over those profits regardless if the profits are distributed or not. For anyone, some countries in the European Union have the same legislation. For the rest of the world, doesn't work that way. So the strategy maybe works, but be very careful in terms of selecting that type of strategy if you are a U.S. citizen or a member of the citizen of the European Union, because the legislations are similar. They do not authorize that anymore. So be very careful in terms of planning your tax strategy. Another way to the next level of creation, the next level of protection is an offshore trust. The offshore trust in the sense of planning your exit strategy. This is a very good tool to use when the one generation wants to transfer wealth to the next generation. So to avoid this litigation, to avoid infights within a family, usually start after the head of the family or the previous generation is gone, then it's a good idea to create a trust, transfer the assets of the asset or the business to the trust, and then designate beneficiaries. The objective of that is the protection of the assets that have been created in one generation for the next generation to manage those assets, and to limit the trust can be created to transfer or to dissolve or to give out the property at a certain age of the beneficiaries. But the objective basically here is to renounce the ownership of the asset of the business and transfer it to an offshore trust. In terms of reports, there are two specific legislations that were created for the reporting of holding foreign assets. The first one is FATCA. FATCA is a legislation that was enacted in the United States with the objective of reporting of the assets that are parked in foreign companies, in offshore companies, and hold the funds in a offshore bank entity. The way that FATCA works is that basically whenever a bank wants to do business, an offshore bank wants to do business, the offshore bank needs a corresponding banking account. When the corresponding banking account usually is either a US bank and a European bank. This US bank is required to provide the service, or by contract provide the service to the offshore bank, but the offshore bank is required by the IRS to register with the IRS and obtain a registration number to report any US citizen that holds an account within the offshore bank. And if that is not compliant, the US bank, given the service of the corresponding banking to the offshore bank, closes the account. So it's critical. The offshore banks are reporting to the IRS directly through this obligation that they have, otherwise their accounts are cancelled. And the offshore bank, the only way for an offshore bank to do business is to have an account with a larger institution that is usually it's a US institution. In that way, the IRS is forcing to the offshore banks to report any US citizen holding a bank account in an offshore bank, an offshore institution. The other one is the Common Reporting Standard, the CRS. That is an agreement among many countries that includes the report, the exchange of information between countries for trying to combat the taxes that are not paid on a certain jurisdiction. For example, different from the FATCA, FATCA is coordinated by the IRS. There is a branch of the US Treasury. In the CRS, the Common Reporting Standard, there is no one single institution doing that coordination. This is an agreement between many countries. The only countries that have not signed Common Reporting Standard, CRS, are Nicaragua, Philippines, and and Gambia. Those three countries are not member of the Common Reporting Standard. Then the rest of the world, Asian countries, members of the Commonwealth, Australia, New Zealand, and Latin American countries, they are all members of the Common Reporting Standard, including the offshore banks in the Caribbean region. So there is not anymore the ability of hiding taxes or not paying taxes. That is gone after this legislation and after the Panama Papers and all those scandals. There is not anymore possibility to hide taxes or to hide money not paying taxes. If you want to check more information about these topics, you can view our channel here in YouTube, this of reproduction. If you also want to subscribe to receive more information when we post more videos, and if you have specific questions about this topic, you can click on the link that we have here in the reproduction box of this video and send us an email. Fácil Consultant. Thank you.